Hi friends, it's Chris. Welcome back to the channel. So headline, British tech magnate Mike Lynch among those missing after luxury super yacht sinks off Sicily. And I want to give you a market update and also mention this because this is a really unusual story. And there's a couple things in here which are worth mentioning because this is not something that happens every day. If you're unfamiliar with Mike Lynch, I think those in the UK probably know exactly who this is, but he's often referred to as the Bill Gates of the UK. And he had this major deal with Hewlett Packard, and then he was accused of fraud. He was actually, though, acquitted and, maintains, hey, I didn't do anything wrong. It's all Hewlett Packard doing stuff wrong, and Hewlett Packard don't know, you did things wrong. Both parties blame each other. They go to trial, so he did win. And it was interesting because we're talking about so much money, right? $11 billion deal. Now, if you dig into this stuff, though, there's a couple details that I think are certainly worth mentioning. His partner, who was involved with this whole trial thing, so I guess you could say co-defendant in the fraud case, he died in a car crash, actually. So Mike Lynch dies in a boating accident, and then I don't have an accident right. Well, I'll tell you details in a minute, but then his partner dies in a car crash. And the way they describe it here, it says, and his name was Stephen Chamberlain. It says Chamberlain was fatally struck by a car while out running on Saturday. So not like car crash of like two cars crashing. It sounds like he was out for a jog and gets hit by a car. So if those of you who are in the UK, I'm gonna be curious if this is on your news also. So again, Mike Lynch died in a boat accident, and then his partner dies in a car accident. But again, he wasn't in a car. As I said, he was running on the road. The boat thing is strange because it was really close to the coast. You guys can see where it is off the coast of Sicily. It was this kind of boat, so it's like a really big yacht, right? So, or sailboat, however you want to call it. But it was called the Bayesian. I'm just showing you guys a couple pictures of this thing. This is it at night. The explanation that they give is that it was a water spout. I was like, what? I didn't even know what a water spout was, to be further frank. I guess it's like a flash tornado thing. I'm just showing you pictures of it. That's why I said this whole thing is really bizarre. So yeah, like this kind of thing. And I don't know what to make of this. This was the article had just come from the AP Associated Press. But for the rest, we didn't find anyone. I guess they've been looking at this for a couple hours here. I think they are inside all the missing people. He said he had been up early to check the weather to see if he could go fishing and surmised that a sudden water spout had struck the yacht. It could be that the mast broke or the anchor at the prow pulled it. I don't know. So I don't know what to make of this stuff either. I just say this whole thing is unusual. If there wasn't if it wasn't for this car crash accident thing here, I wouldn't necessarily suspect anything. But putting these two together, it seems so I don't know. So anyway, I'd like to get your guys' opinion on this one. And if you're in the UK and you have different news than what I get, you can share. So I wanted to share that. Also too today, and this is kind of the tale of what's going on in, I guess, billionaire land. Carl Icahn, he was charged. I guess he was had a bunch of loans, billions of dollars worth, and he wasn't telling people about it or reporting it properly. So the SEC fined him $2 million, which is a slap on the wrist for these kind of people, right? And then there was this short fund called Hindenburg that was calling this out for a while now, and the SEC were right. But for these kind of people, that's the cost of doing business. And I point this stuff out because for those of you who are new to the markets, you may not know that this kind of stuff happens. It sounds like the movies kind of stuff, but it happens. For example, George Santos, this is just today, just breaking now as I started to make this video. He pleading guilty to wire fraud and identity theft. And if you've been following the George Santos case, you kind of know who he is. He's kind of a weird guy. But there's that. And this is sort of, why would you just want to invest in, say, index fund that tracks the S&P 500? Or why would you do, if you want to be a little bit more aggressive, just invest in something that tracks the NASDAQ or the NASDAQ 100? Is because you're putting your money spread out a bit. You're not just putting all your eggs in one basket because, in this day and age with YouTube and social media, these kind of things, even your most popular companies like your Teslas, your Nvidias, they could be cooking their books over there for all we know, right? Who knows? And when you see what happens to billionaires, be it, okay, I'm just going to take out loans, not tell anyone, and just pay the fine because it's the cost of doing business, or you see someone like Mr. Lynch just disappear because maybe who knows? Who knows what's going on? But let's say things happen, and this is the best way to protect yourself is just don't put all your money in one place. The other thing too is we actually have the Fed meeting this week. I think not a Fed meeting. It's at Jackson Hole actually. Federal Chair Jerome Powell is going to be talking, so that's a better way to put it. He's going to give a talk, and the pressure on Jerome Powell is to cut rates these days. If you take a look at this historically, so in our current cycle, they started raising back in July last year, and we're currently in August of 2024. So it's been like 13 months since we've cut, and already people are like, look at history, look at back in 97, 98, you held it for 18 months, so you could go a little bit longer. Or look at 2006, 2007, 15 months, right? You could hold a little bit longer, but then people are like, no. And I think it was actually Wells Fargo was like, no, look at 95. We're going to be like 95. You're way too long. I mean, back then it was like only 5 months, right? So we're kind of in the middle between being a short cycle or a long cycle, right? You can see we're literally right in the middle in the modern era. So, I'll let you guys be the judge of that. My personal opinion on this stuff is I think you could just hold here. I know there's a lot of pressure because this is stuff that Fed looks at. So this is either your CPI inflation reads or your PCE reads. But inflation is coming down. I mean, I can see it coming down, but it is not to the 2% level that the Fed wants. And also, if it indeed is coming down and the rates are where they are, why not just keep them where they are? You could even raise, like I said, theoretically. Well, the reason is because there's unemployment or worries. So if we keep rates too high and we're not pumping money into systems so that companies can invest in themselves and invest in their employees, et cetera, why not cut and get the things going again? The thing is, though, historically speaking, and I'm just showing you a chart of unemployment, we're actually not that high in terms of historically. So our unemployment's not that high, but I understand that people are losing their jobs. So it's higher than it was in the past, right? And then you hear this talk about the Somme rules, like, oh, look at last year and it's rose too much. So therefore, we are in a technical recession, you could say. And whenever we talk about this stuff, are we in a recession or not? I always say the same thing, regardless of what the national numbers say. It depends on what's going on in your neck of the woods, right? So, for example, if you're over at GM and you just lost your job, this was just announced today, 1,000 salaried, software and services employees are laid off. It's tough, right? So there's that. There's also, we have Cisco is laying off. We just talked about this just a couple days ago, 7% of their workforce. I think they were down on their sales, so they, got to figure out places to cut. Paramount, I think they're doing some sort of merger and some sort of buyout possibly. There's been news about this the last couple of weeks. But they cut 15% of their employees. Like you put all this stuff together. I feel like, again, it depends on your particular situation, and always just, protect yourself, protect your downside. The other thing too is like, okay, what is Wall Street saying? So this was an interesting one. They asked Goldman a couple things. So one is Goldman changed their prediction on whether or not we're gonna have a recession. So now they're calling 20% chance of recession. Before it was 15 during the crazy sort of crash with the Japanese carry trade. They raised their recession odds to 25%. Now they're back to 20%. I think they just kind of vacillate 5% every now and then. What's interesting though about this stuff is they were talking to the main person and he was saying, hey, there's lower liquidity in August and people just want to go out and have barbecues and let's party till September 16th. He actually gives a specific date. I'll read it for you guys here. It says here, however, there could be dips ahead. Rumor warned that after September 16th, like the actual date, the stock market could once again turn negative. The second half of September has historically been the worst two-way trading period of the year. I will not, quote, I will not stick around for this. That's what he wrote. On the positive side, though, he was saying here, the pain trade for equities is higher, and the bar for being bearish at the beach into a Labor Day barbecue party is high. So, maybe according to at least this person over at Goldman, maybe 4 weeks of bullishness and then possible bearishness after September 16th. And I think he's referring to rates in the Fed meeting. At the moment, though, actually, it's interesting. The dollar's been really dropping compared to other currencies. I'll show you guys some charts here. So I think these are bets on this, on essentially that they're going to cut. I mean, the Fed. The bet at the moment is maybe 25 basis points in September. If employment numbers come in bad in August, maybe you're looking at 50. But we'll see what see what Jerome Powell says on Friday. So he's speaking at Jackson Hole. Anyway, I'm showing this chart here. This is the past month. I have how it sorted, so you can see the yen is up. Well, this is USD compared to other currencies, but however you want to say it, dollar is down compared to the yen, or you can say yen is up compared to the dollar, but roughly six, almost 7% in the past month. I'm in Korea, if you guys know, so I track this stuff quite a bit, and I've said several times on the channel, if the dollar to Korean won is 1,400, that's like ridiculously high. 1,300 is high. The normally trades between like 11 to 1,200. That's sort of what it has been historically. You guys can see the chart here. So we are still a little bit high. So theoretically, if you want to go back to neutral, maybe it'll come down a bit. And this is different things that you track. One of the things that you could also track as well is how do U.S. Rates compare to other countries and economies around the world. So according to this chart, and this is an interesting one, and for those of you who like numbers and like charts, you'll be all about this one. So basically, the blue. So this is the red. So that's your emerging markets or emerging economies, and then your bluest are more advanced ones. So you could make the case that the USA is a little bit high compared to other countries. You could make that case, but do we need to cut that much? Maybe not. If you want to compare to other countries, so you can see sort of the 5% is around here, and then. I think we're at. I think it's like the Fed rate right now is like 5.25 to 5.5, something like that. And so theoretically, do you want to cut to under 5? I mean, I guess you could, but like I was saying, is you have two things you worry about. You're looking at inflation, and you're also looking at employment data. So there's that. And this is sort of what we're tracking. What is Fed Chair Jerome Powell going to say at Jackson Hole, and how's it going to affect the markets? Well, you can actually look historically. It's really interesting when you look at this stuff. So, and this is sort of for people who are trading this stuff. So going into the Jackson Hole meeting, it's funny that we have data on this stuff, right? So the prior 5 days, what does it do? So back in 2022, people were pretty bearish. So they were, market S&P went down 2%. Then the 5 days after, it went down 5.5%, right? So, and then basically the 10-day period around where we are now, it went down. The market went down 7.4% last year. It went up 3%, right, in that 10-day period. So what's it going to do this year? Again, you're either looking at probably small cut. I don't think they're going to raise. I don't think it's going to be a thing. And we'll see what he says. And then the other thing too, which is we can take a look at this as well, is this is what the chart in is of the market say. So a lot of the big tech ones are up. So be it your Nvidias and Teslas, and AMD was up a bit. I'll show you an article on that in a second. But essentially, we still have that AI trade carrying the market, and that's been where our market's been a bit unhealthy. Much of our gains is actually in the market has been Nvidia. So, if you are in the S&P 500, just tracking that, which is a good way to base your portfolio, or if you want to do NASDAQ, you can mix some of that as well. You've gotten a lot of gains this year. You've done well, but a lot of it has been Nvidia. And so how much longer can this thing go? The one thing I've mentioned several times is when you have a company, so be it NVIDIA, or why don't talk about Tesla or whatever, if one company starts making a bunch of money, right, the other companies are like, hey, I see that money you're making over there. I see what you're doing. And so, they start making their moves. So I guess NVIDIA, they bought some sort of company or acquired, is the right word, ZT Systems. And so they're going to try to challenge NVIDIA. This was the quote here. It says, it brings 1,000 world-class design engineers into our team. It allows us to develop silicon and systems in our parallel, and most importantly, get the newest AI infrastructure up and running in data centers as fast as possible. Also says, it really helps us deploy our technology much faster because this is what our customers are telling us. So they're making their moves to try to catch up to NVIDIA, and then there's that. So, this is the stuff that we look at in the market. I'd like to get your guys' thoughts on, what you think about this Mike Lynch thing. I think this is a really interesting story, and I'd like to hear from people in the UK if you guys are getting different news than what we have here. It's a really, really unusual story. And then what do you guys think about Jackson Hole? Again, my opinion is you could hold. Why not? Because looking at the data, we're not quite down to that 2% inflation, and unemployment isn't really high historically. Just I understand. I mean, guys, I understand. There's just a lot of pressure from the market to cut. Get that money printing going again. So anyway, love to hear your guys' thoughts on any one of these things, and I'll catch you all in the next video.